Good evening, everyone. This is John Locke, and this is the Locke in Your Success Trade and Market Update for September 28th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we are not making specific trade recommendations. Also, the risk of loss in trading options can be substantial, so please be aware of your risks prior to placing any trades. And also, any trades and/or results covered in this presentation may or may not be live trades. In the event they are a computer simulated trade, we do the best we can to make sure everything is represented as accurately as possible. If you're watching this on YouTube or SMB, please come on over to our trading blog at lockeinyoursuccess.com and join our mailing list. All right, let's take a look at the markets. If you remember last week, we were expecting the Russell to be bullish. However, what's kind of happened is we just went into a straight sideways trend here. You'll notice that this pattern is quite different than what the market has been doing. We've been breaking our resistance level or our price patterns, and we've just been screaming up to our profit targets the last 3 times. Here, we broke it, and now we're running sideways. A lot of that has to do with the fact that the Dow was overextended coming into a major resistance. If you come over in here and look at the Dow, you see we were overextended, and this had a relatively bearish week last week. And one of the things you'll notice is that Russell didn't. It actually closed at a new all-time high, and it hit all-time highs this week. So the Russell's been hanging up there while everything's pulling back. The NASDAQ also has been very strong in general. It wasn't quite as strong as Russell this week, but this has been strong, and it's holding the very high end of its consolidation, which I consider to be bullish for the NASDAQ. And as far as the SPX goes, we had a somewhat bearish week for the SPX also. However, you have to remember this was overextended as well, and just kind of pulling back to its moving averages here. So everything's more or less acting normally, but the bearishness in the Dow and the SPX have been pulling the NASDAQ and the Russell down. And I believe that as soon as these things bottom out, whether it be at their moving averages, which this would be a reason for it to bottom out, or if it happens to come all the way down to their primary trend lines, which for the Dow would be down in the 15-1 area. Either way, as soon as they reverse, the Russell's going to want to go. And the Russell's going to want to go to its target that we have up here at around 1110, and possibly maybe even slightly higher at 1120. Because of the sideways consolidation, we may end up actually raising our target here for where the month is going to close out. We'll have to see if my projected trend line, this isn't a real trend line, it's just projected off the last rally. If my projected trend line holds, then I'm going to end up raising this up closer to our 1110, 1120 area. If we do happen to break this trend line, we're probably going to close up here right around what we thought, around 1090. So that's going to be the factor here. We'll have to see how this reacts when it finally gets, either pulls back into this support level, or if it bounces and takes off. And that's going to have a lot to do with what happens next week in the government. But as of right now, that's the area we're watching. And that's going to help us decide whether we want to raise our target here or possibly drop it down a little bit. So we're kind of in a state of limbo, but we are still extremely bullish on the markets, even if we get a pullback into our support areas on the SPX and the Dow. And we come back a little bit this week in the Russell. I'm still very, very bullish. Still looking for a close at least 1090, possibly higher if we run sideways into this trend line and bounce. It's going to give the market some energy to really go. All right, let's take a look at what we have going on for trades. Since we're here with the October Bearish Butterfly, we will start there. This trade did get some adjustments this week. Basically, I was sitting in, well, let's just go back there. Let's go back to Wednesday. As of Wednesday, there had been no changes from last week. We were sitting in our 1040 and 1060 butterfly positions, and our position looked like this. Now, being up at the front third of the position here and getting late into expiration and being behind the market, and the market skew starting to skew up to the upside, our delta's starting to climb pretty high. And I was punching over, I think on Tuesday I went over 500 maximum delta, but it was intraday. We backed off. We also went over 1080 intraday, which is our add point, and the market backed off. It did it again, I believe, on Wednesday, where I was over delta, over 1080. and then it backed off. And on Thursday, we were over again. We were up over 1080. We were over our maximum delta limit. We're 21 days to expiration. I said, hey, it's been 3 days now. We've been over 1080. We're starting to take on more and more upside risk. We should probably just take this and adjust it to guidelines. So what I did is I rolled, because we were over our maximum delta prior to hitting our 1080 at point, I went ahead and rolled the 1040 to the 1080, and I went and added the 1100 butterflies so that we're fully scaled in now. Adding the 1100 may have been a little bit overkill because, again, we backed off towards the end of the day, and of course we backed off even further on Friday. So we're kind of in the center of the position now. If we move forward to the end of the day on Friday, see, this was done in the morning on Thursday, and the market was up. It was probably at the peak of the market, it was probably the worst time to do it, but we did it anyway. And at the very minimum, we should have rolled the 1060 to 1080s because we had to cut down some of the risk. However, I figure we're going into expiration guidelines, and we might as well make this interesting. Scaled right in the 1100s, and we're going to start adjusting this a little bit more intraday now. And we start exceeding 500 delta, we'll start doing our thing as we go into expiration and see where that goes. But as of Friday at 3:30, we're down about 4,600, and our delta is completely flat. And if the market decides it wants to sit for the next 4 or 5 days, if you put some lines in here, the good thing about this position, especially near expiration, is it gains value very, very quickly. As soon as the uncertainty comes out of the market with Washington, if the market doesn't move, it'll be doing very well. If the market does move, then we'll just have to follow it. But this is what we're looking like right now. The next thing we'll take a look at is our October M3, which only got one minor adjustment on Tuesday. If you go back to Tuesday, and the reason I'm being so complete with this, I know we're supposed to be covering the November bearish butterfly, but nothing happened to that because the market didn't do anything. So I figure we might as well cover some of these other trades. If you recall on this, towards the beginning of the week here, we had 5 short 1060s, 5 short 1070s. Tuesday, when the market shot up, I did an adjustment here, and the reason I did it is mainly because I know we have a bit of a gamma trend issue going on here. So we come in Tuesday and the market shot up, and our delta is fine as of 3:30. However, like I said, we're starting to get quite a bit of sag here. So I went ahead and I decided just to pop those 5 verticals in there. I've been kind of wanting to do them since I put the position on. So I went in here and bought 5 1060s, sold 10 1070s at the end of the day here. And if we shoot up there, I'll show you the new position. Flattened our delta to about neutral. And here we are, and it's more or less straightened the gamma trend out. So this is how we're sitting. And I decided to take on a little bit more downside risk. As you know, I am pretty bullish right now. So if we shoot up till Friday, here's what we look like as of the end of the week. We are starting to push a gamma trend problem here again. So if we end up getting anywhere near the edge of this tent here, we'll be fixing that. But as of right now, everything looks really well, and they can withstand a fairly big upside shot without getting hurt too bad, and a fairly big downside move. So all's looking good there. If we come over and take a look at the October ROCK trade, there was one very minor adjustment done to this on Tuesday. If we come back to Monday, here's what our position looked like. And Tuesday, when the market was up really high, I was well over my minus 250 delta limit, or a little bit over. I only have 4 butterflies up here. I usually like to have 5. So I went ahead and all I did is I put in the 5th butterfly, like midday on Tuesday. And we bought the 1100s. And if you bring that to Friday afternoon, you notice the position didn't gain any value. It actually almost lost a little bit, and that's because of volatility. Even though our positions are very high positive theta, and the market really hasn't moved at all, the market makers are expecting a large move, so that theta doesn't come out as the model predicts all the time. So you can sit in the position for very high theta for long periods of time. If the market if the participants in the market think the market's moving, they're not going to let up on the time value in those options. And a lot of times you won't gain any value. As soon as we get so close to expiration, they have to do it, they will. Or if the pressure comes off or the uncertainty comes off and the market doesn't move, you'll get the money back. But other than that, you just have to wait it out. So here is our current ROCK position, and this looks really good. Any kind of a reasonable movement for the rest of the month, and we really shouldn't have any trouble here. So that is the October ROCK trade. And our last three trades are our October V trade, which got no adjustments at all. So I'll just show you how this closed out Friday. If we start spreading down into the under 1050, we'll start widening this out and raising our expiration graph. But as of right now, we're still bullish. We still think the market's going up, and there's really not a problem if the market sits here. So we're just going to wait it out, see what happens, and we'll see where this goes. Like I said, if we hang around down in this area too long, we'll start widening our straddle out. But as of right now, I like the position. Not going to be a stellar month, but it should be fine. And looking at our November V trade, really nothing's happened here. Got the same issue with the volatility holding this down. And here's what our position looks like. This still looks classic textbook. It looks like it's going to be a good position here. And last but not least is the trade we're going to be covering if we ever get the market moving is a November Bearish Butterfly. We put this on at 1050 shorts, and the market was right around 1070, and it's right around 1070. So really nothing's happened here, and we're sitting here basically at break even, as would be expected. All right, so that's pretty much all I have for this week. Next week, I will probably not be doing the market update on Sunday night. It'll probably be put out on Monday. I'm going to be at a neurolinguistic programming advanced certification class, so that's going to delay me getting the market update out. But other than that, we'll keep you updated when they changes. Thank you, and have a great week.